So for the past couple days, we have seen a lot of turmoil in geopolitics when it comes to, of course, the Israel-Iran and now the United States conflict in the Middle East. And while here at Fatal Investing, we have given our personal opinion as to what should be done, we haven't done really what we should have done from the very beginning. And that is, of course, figure out where to put our money with this whole entire situation. I really hate to do this because it basically kind of looks like I'm profiting off of war. And, well, war, nobody wins in war, and I'm fully against war. In fact, we even said on the live stream yesterday that this is not something that we like. However, the reality of the world is the reality of the world. And even though I am not part of the world, still living in it, right? So it is what it is. However, we can still make moves when it comes to our finances to see how can we protect ourselves in this kind of turmoil. And of course, we're going to take a look at now a company that is pretty tied with the United States government and war, and that is, of course, Lockheed Martin, because it's a company that I fairly like, and honestly, it's one of the first companies I analyze here on YouTube with like an actual format. So let's take a look at guys Lockheed Martin right now. And obviously there's nothing surprising here. It's a military contracting company similar to that of like Raytheon and Northrop Grumman. So let's take a look at this a little bit further. Now, being that today was Juneteenth, as I'm recording this, it is June 19th. The stock market was not open. However, as of close on June 18th, we could see that the stock fell 2.28%, post-market gained at around 0.3%. Looking at this on the 1 year, it is actually up almost 2%, so it's not up that much. Year to date, it is down 3.57%. Not something that I was really expecting. On the 52-week range, we can see here that the low is $418.88, and the high is a whopping almost $620, meaning that we are actually near that 52-week low at the current price that we just saw. Really, really good starting point when it comes to analyzing a company. Moving forward, we can see that their earnings were on April 22nd. EPS normalized actual coming in at $7.28 for a beat of 98 cents. EPS gap actual at this coming in at the exact same number, beat by 93 cents, and a revenue of $17.96 billion, beats by $158.27 million. Now, for the 1 July 22nd normalized EPS, it is $6.59, EPS gap estimate of $6.64, and revenue estimate of $18.59 billion. Out of 16 revisions, 15 of them to the downside. Looking into now analyst ratings when it comes to Seeking Alpha versus Wall Street, we can see that Seeking Alpha doesn't have a single sell on this company. 9 total authors since the last 90 days. We can see that one of them has it as a strong buy, 7 of them have it as a buy, and 1 of them has it as a hold. Comparing this to Wall Street though, there is 1 sell. With 23 analysts since the last 90 days, 7 of them have it as a strong buy. We got 4 saying a buy, 11 saying a hold, and 1 saying a sell. And to go a little bit further, we can see that there's actually no bearish articles when it comes to Lockheed Martin. They are all in the bull side. So now with that said, let's jump into the spreadsheet. We got the ticker for LMT, market cap of $109.8 billion with a current share price of $468.60. We already saw this. It was down 2.24% or around $10.74 with a PE. This is actually fairly surprising. A PE of 20.24, which is actually right at the mark where I like to normally buy companies, around the 20 PE mark. Looking further, we can see that they do pay out a dividend of $13.20 per year, which is a current yield of 2.82%, a payout ratio of 44.57, 5-year CAGR being 6.78, 22 consecutive years of dividend payment. Ex-dividend date passed as of June 2nd. Payout date will be on June 27th, and they do pay their dividends quarterly. And based off of the current shares outstanding and this dividend, we can see that they pay out $3.1 billion every single year. And now looking at the payout ratios in regards to the free cash flow, the 10-year average free cash flow ratio, it is around 58.31%, and the last year's free cash flow goes up to 61.7%, a little bit high for my liking. However, we'll get to the free cash flow when we get to the free cash flow. The next metric that we can look at to see if a company is overvalued, it is of course price to free cash flow. We got price to earnings being of course 20.24. However, price to free cash flow, we can see it being 22.02. And if we compare this to the 10-year average price to free cash flow, it is 19.62. Normally, you want the 10-year average price to free cash flow to be higher than that of the current price to free cash flow. However, we can see that this is inverted, but honestly, the numbers are very, very close to each other, meaning that we're really not that overpriced by the looks of things. Current price of sales are 1.53 as of the trailing 12 months, and when it comes to the net profit margins, they are at around 7.66%. So now let us take a look at the actual fundamentals, starting with the net income. We can see here that this is actually not as consistent as you would think. Granted, you have to give it with a massive caveat, and that is the fact that, guys, when it comes to Lockheed Martin, Raytheon, Northrop Grumman, they are highly, highly dependent on government contracts and conflicts, right? Geopolitical conflicts, which is why usually when there's geopolitical conflicts, you see a little bit of spikes here and there, right? A little bit of spikes here and there. So take that obviously with a grain of salt. Nonetheless, though, 2015, we got $3.61 billion to today of $5.5 billion. This is an increase of 53%, and all in all, I'm going to give this a solid 80%. Looking now at the free cash flow, we see something very, very similar. Actually, we can see here that in 2021, which if I'm not mistaken, this is when Russia invaded Ukraine, if I'm not mistaken. I'm fairly certain we could see that spike right there. So most likely we're going to see another spike if this war with Iran continues. Nonetheless, though, 2015, we got $4.2 billion to today of almost $5 billion, 4.985 to be exact. All in all, though, this is an increase of 20% with an average of $5.3 billion. I'm going to give this, I would say like a 70% for a grade in total. Into now the revenue. Now the revenue actually looks very, very good, as you guys can see right there, going from 2015 of $40.54 billion, going to today of $71.8 billion. This is an increase of 77.15%. I'm going to have to give this 100%. This is looking very, very nice, really nicely, consistently increasing as well. Into now the assets as a reference only, we can see that after 2018, they are increasing it. Liabilities have been kind of mute. However, as of 2021, it's been going up a significant amount, going up to almost now $50 billion in liabilities. Assets minus liabilities is, wow, all over the place with a negative in there as well. Not necessarily that good. In the positive, though, as of 2018, average total assets of $50.5 billion, liabilities of $45.52 billion, and this is a difference of almost $5 billion. I'm going to have to give this, I'm going to have to give this like a 50%. It's not as good as you would think it is. Cash flow minus liabilities, we can see that it's basically a flat line, right? It's basically a flat line. As of the trailing, we're at negative $45 billion. The average being negative $40 billion. I'm going to have to give this, once again, a 50%. It's just, don't really know where it's going. And now into the shares outstanding. This is actually looking tremendous for one reason, actually for two reasons. And that is, for starters, I believe that they have consistently bought back shares every single time. Going 2015 of 303 million shares, that's the second reason why I like it. The numbers of shares outstanding, millions of shares, not billions and millions. So that's a really, really small amount of shares outstanding to today of 233 million shares outstanding. Guys, this is a buyback on the 10-year of 23.1%. And previous year to the current year, it is almost at 3%. Nicely consistently increasing. They know what they're doing when it comes to this. This is actually looking tremendous, easy, 100% when it comes to the shares outstanding. And lastly, cash and equivalents. They currently hold $1.8 billion with an average of $2.1 billion. Overall grade for me, 79%, almost 80. You could maybe say an 80 if you just increase one of these over here. But in general, looking really, really solid. I like Lockheed Martin in general. Now, the problem is it a good price to buy? Let's take a look at the discounted free cash flow. All right, so taking a look at this now, I've already input some numbers, but we can see here that the average revenue to free cash flow growth has been around 8.82%, as you guys can see right there. The average net income, it is almost 36%. Now, this is actually a little bit strange because there was one year that there was a massive jump when it came to that net income growth. And of course, we saw that when we saw the net income, and it's right there in 2017, going from $2 billion, right? 2017, $2 billion to 2018, $5 billion. So right then there, that's making it jump a whole lot. So with that, I'm actually just going to remove that from the average so that way we get a much better interpretation. And it turns out that it's roughly at around that 22% mark when it comes to the net income growth average. And lastly, when it comes to the shares outstanding, we can see that they've been buying back at around 2.5% in the past 10 years every single year. So for the assumptions on the low end, I'm going to go 6%, 20%, 16 PE assumptions, 1% buyback, and a discount rate of 8.6%. For the median assumption, I'm going to go 8%, a PE of 16.5, a share buyback of 2, and a discount rate of 7.6%. And lastly, for the highest assumption, a revenue of a free cash flow to revenue of 10%, a net income growth percent of 24, a PE of 17, and a share change of 3%, and a discount rate of 6.1%. And with this, we get the target share prices of $1,338.71 to almost $3,000. Absolutely bonkers. And then with the margin of safety of 5, 10, and 15, we got $1,138 basically to $2,842.59. Does this mean that this is going to get there? Absolutely not, right? This isn't telling you where the share price is going to. This is telling you the intrinsic value of the company looking forward 10 years, which honestly doesn't seem too far-fetched. It really, really doesn't, based off of everything that we saw when it comes to their fundamentals. However, things could change on a dime, right? Things could change on a dime. Again, this is not telling you if the share price is going there. This is telling you what the intrinsic value of the company should be. And by the looks of it, it's still looking like a pretty good buy in accordance to the current price of $468.60. Even on the low end, we're still way under the lowest assumption in this case. But again, not financial advice. Every investment is the present value of all future cash flow. And this calculator that you guys are seeing right here, I have it available for all of you guys. The link is in the description below, as well as if you're part of the Discord, it's also on the Discord as well. The ones that you guys have access to, it is the 5-year one, meaning that these numbers will look a little bit different. But nonetheless, though, it is not the end all be all. It is just a guide to help you all make an assessment as to whether or not the company you should buy is actually worth buying at the current share price. None of this is the end all be all, to be exact. And lastly, if we take a look at the dividend, putting in $6,215, which is the monthly income at the median US income per year, we can see that this nets you 13.26 shares, which is an annual dividend of $175.07, quarterly of $43.77, and a monthly of $14.59. So all in all, when it comes to Lockheed Martin, I gotta say, guys, it's one of the companies that, even though I'm not a fan of war, in fact, if you guys see the live stream towards the end, you'll know exactly both of our opinions on the current situation when it comes to Iran. I don't like it. However, at the end of the day, the way that I see it is, if the U.S. government is going to take my tax dollars to give it to Lockheed Martin to make weapons to then start wars, I may as well buy into Lockheed Martin and get some of that money back. That's kind of just the way that I see it. So it sucks. It really does suck. However, it is what it is, right? It is what it is. You can either complain about it or you could do something about it. I'd rather do something about it. So let me know what you guys think. Do you like Lockheed Martin? Is this one of these companies that you just abstain from because of the moral aspects of it? Because remember, it's not just offensive. They also do a lot of defensive stuff as well. So you have to take it as it is, right? I'm very, very curious as to whether or not you guys like it or you don't like it, or if you're somewhere in the middle. Do you own it? Let me know in the comment section below. And with that, guys, I think that'll pretty much do it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you'd like to join us on the Discord, the link to that is in the description below. So with that said, guys, peace out, and we will see you all next time.